Today I want to talk to you about the new mortgage stress test. They make it sound very stressful, they make it sound complicated. It's actually pretty simple, so I want to break it down for you guys right now as simply as possible. The basics of it is it applies to uninsured mortgages, meaning you're putting more than 20% down on the purchase of your new home or cottage. Unless, of course, you're putting less than 20% down on your mortgage, that is an insured mortgage, which means the lender is protected anyways and you don't have to go through the stress test. The only exception to that is first-time home buyers, and as we all know, over a year ago they put the stress test in place for first-time home buyers so that no matter how much you put down in your house, they want you to qualify at the Bank of Canada rate of 4.99%. Now, if you're putting less than 20% down on the house, you're going to have an insured mortgage, you're in the clear. You're also in the clear if you get a mortgage through a credit union. Now, credit unions don't have to follow this rule. You're further in the clear if you're just renewing your mortgage and you stay with the same bank you're with right now. So if your mortgage is up for renewal and you're changing banks and you're putting more than 20% down, you're going to have to go through the stress test. If you stay with the bank, you're in the clear. So you're buying a new home or vacation home, cottage, chalet after January 1st, and you're putting more than 20% down. Here's how it's going to affect you. Okay, let's look at two examples at two different price points. First at $535,000 purchase price, second at the $1.2 million purchase price. And we're going to work in reverse from your monthly income available to put towards your mortgage payments. So the first example, let's use $2,000 for this first example. So before January 1st, if you have that amount at 2.89% over 25 years, you would qualify for a mortgage amount of $428,000. Plus your 20% down payment, your total purchase price would be $535,000. After January 1st, you can see the difference here is that you're going to have to qualify at 4.99%, which is the present Bank of Canada rate, because you have to qualify at 2% more than your 2.89% bank rate that we're using, or the Bank of Canada rate, whichever is higher. In this circumstance, the 4.99 is higher. So in this particular situation, your $2,000 a month would qualify you for a mortgage of $347,000, plus your 20% down, which is $87,000. Your total purchase price of a home you'd qualify for is $434,000. So that would be down from the $535,000. So that's example one, doing it in reverse for how much money do you have to put towards your mortgage every month. So in example two, we're moving out of the Collingwood market into the Toronto market, where you might be looking to purchase a home around, $1 million, $1.5 million, whatever the average price is. So in this instance, you have $4,500 per month disposable income after all your expenses to put towards your mortgage. In this particular situation, you would qualify for, at 2.89% before January 1st, you would qualify for a mortgage of $960,000 plus your 20% down, which would be $240,000, for a total of $1.2 million total purchase price for your house. Now take that into January 1st or beyond, and you would take your $4,500 a month and use the Bank of Canada rate of 4.99%, and that would qualify you for a mortgage of $776,000. With your 20% down of $194,000, you would have a total purchase price of $970,000, down from $1.2 million. So there it is. That's the impact overall. So you're not actually going to have to pay that much more a month. The banks just want to know that you could afford to if need be. So the reality is it's just giving us all a bit of a buffer at the end of the month, each month, to know we have a bit more money to spend and we're not maxing out on our mortgage and potentially being in trouble should the market change a bit or interest rates change a bit upon renewal and things of that nature. So overall, not stressful, simply a buffer. Most of us will be able to afford a little bit less than we were before, but that's probably good news to keep us all into wraps and not overspending on our homes. So thanks again for sticking with us here. Stay tuned for more videos as we go through the year, hot topics and interesting real estate facts. Comment below if you have any concerns about how this might affect you. Shoot us an email. We can clarify more details. There's obviously a lot of moving parts with this, but the basics have been explained. So reach out if you need more information. Stay tuned for more videos, and we'll see you back here soon.